What is up? Welcome to my first video. My name is Elijah, aka Ghost Capitals. I'm a coach at Inter-Equity Trading, and I just wanted to share a topic that really improved my trading for the better. And it's also a topic that will drastically help you improve your trading in the lens of the concepts that we teach here at Inter-Equity. So let's dive into this. So let's draw out a diagram for you guys. I want you guys to remember in the previous strategies that you've traded back in the day, whether it's been support and resistance, ICT concepts, smart money concepts, whatever. So normally we'd be seeing this as a bearish breaker structure, correct? So bearish breaker structure. And then we'd have a POI or supply zone, order block, whatever. Same thing. Normally, we'd want to see what created after this area would be respected, a lower low. Yeah. So we know that in those concepts, we'd be wanting to trade from these areas. So now that we have that in mind, we know that traders are getting into these areas, correct? So that is the most important thing you want to remember. Whenever we see these areas, these smart money areas that you would potentially be taking a trade from, supply zones, demand zones, remember that traders would want to be getting into these areas. Whenever you see these reactions, that gives you the indication that traders are essentially getting induced into the market. And that word is a a very buzzword in the community now. So a lot of you guys kind of get tripped up at the word induced. Think of it as this. Let's write out the definition. Induced, all it equals is enticing someone to get in. So another word for enticing, let's say persuading. So if you get induced, someone is basically persuading you or convincing you to get into the market. Let's say that. So remember that. Now that you know the definition, it gives you a better framework to when we say these words, how you can better understand it. So now that we know that traders are getting induced from this area, we want to know, why do we not take this trade at Inter-Equity? Okay, let's get into that. A breaker structure to the downside. We respect the area to the left. Back in the days, I bet you guys used to take this trade here, short position, stop loss above the supply zone, targeting the new low to make a lower low, correct? And many times, I bet you guys have taken partials somewhere whenever you've gotten a sufficient amount of RR, and then price has shafted you, not taking the low out, and then running for your SL, taking you out break even. We've all been there. And this is why I really love the model that we trade here at Inter-Equity, because it allows us to stand clear from these trades. So why don't we take this? Because like I said before, this here is enticing or inducing traders into getting into the market. So since it's doing that, what does that do? Whenever traders are getting into the market at an area, that leaves liquidity. So now we have liquidity at this high. So therefore, now that we have liquidity at this high, now you have to understand, how can we get into positions to target this high? Okay, now let's get into it. So at Inter-Equity, we teach everything about liquidity. That's all we focus on. That gives us our bias, our direction, our entry, and it is fractal. So whatever you see on the higher time frame is applicable to the lower. Therefore, if we have this scenario here where we respect this area, we want to see price respect this low, aka the infamous liquidity block. So we want to see price respect that liquidity block and give us some sort of entry criteria to the upside. So notice how traders are getting enticed or induced into the market yet again. Normally, SMC traders would be trying to sell this because they see what? Another break of structure. Since they see another break of structure, they would think, oh, this is a scale-in entry. Wrong. That's our opportunity to get into the trade here at Enter Equity. So you guys may be confused, but let's go over some chart examples to really train your eyes to see how we see it here. So if we go on everybody's favorite pair, gold, let's look at gold. So currently on gold, what have we done? We have taken out a low. So now we have a break of structure to the downside. Let's mark that out. So since we have a break of structure to the downside, we know that sellers or SMC concepts would want to be looking for continuation sells. Therefore, we want to wait for reactions from these areas that these concepts or retail would want to be selling from to take our entry from. If we're looking at this time frame here currently, what did we do? So what we did is we taken out a high. So buyers were getting into the market because we taken out a high, and then we respected this area. So we respected the supply area here, which caused us to take out an internal low. So now that we've taken out an internal low, that's good because now we've seen sellers get into this market and create a break of structure to the downside. So now that we've seen that, now it's giving us clarity that we do not want to be looking for sells. So let's just mark this out as another area SMC would want to be getting into positions from. So this is another area that I know that I do not want to be taking any sells from, but I want to see a reaction from this area. So we get a reaction, price comes lower, and I have an entry point that I want to see. I want price to come below here. And why do I want it to come below here? Because we have a buildup at this low. Why do we have a buildup at this low? One, we had a break of structure, and price respected this low and took out more internal. So therefore, I want to see price below this low and do what? Respect this liquidity block. So entry there. And I'm going to be targeting what? These supply zones. So let's frame that out. A nice 1 to 10. And let's see what price action gives us. Notice how we didn't get tagged in. That's okay. All we want to do is practice patience whenever we're trading the strategy, because a lot of the times price is going to miss your entry, but you never know that you can still potentially get tagged in. Look at how we get this reaction, creating this break of structure here. We get this break of structure here, and that's all from this buildup area. Remember, we do not want to be trading this buildup area. We do not want to be taking buys above this low here. So whenever I see this happen, that lets me know that this is enticing or inducing buyers into the market, early buyers at that. So instead of marking it as break of structure, sorry about that, let's mark it as early buyers. Early buyers. So now early buyers have gotten into the market. So what does that tell me? That tells me I'm fine. I can leave my limit on and just wait for price to do its thing. Price tags me in. Look at how we have this strong reaction from this low once the low is taken. Price fiddles around a bit. Notice how we get this small buildup here at this area SMC would be selling from. They would think, oh, a scaling opportunity. We have a break of structure and we just tap back into the supply zone. Literally just gets taken out SL. Boom. Just like that. Look at the strong reaction that we get once this low is taken. Whenever you see liquidity taken in the market, you'll notice that price has a fast run. Usually price won't take very long to hit target. So that's an example on gold. Let's go to YM. When we look at this market here at YM, what do we see? We see another bearish break of structure to the downside. So now that we see another bearish break of structure, keep that same framework in your head. We want to see reactions to where retail would be taking sells from. So essentially, we want to see those supply zones be respected. So now we see that. Where's an area that retail would want to be selling from? Okay, so we have this whole break of structure here. That means this whole area, let's draw the brush tool. This whole area from this high, price would want to be taking a sell from. So I do not want to be looking for any sort of sells into this high. What I do want to see is some sort of buys. And how can I frame that out? So now let's go to the lower time frames. Okay. So now we have this buildup of price action, which is good. Now this lets me know that we could have some sort of reaction from this area here. I do not want to be taking any sells from here. Remember, I want to see reactions. So look at how we get this swift move to the downside. We get this swift move to the downside. So that lets me know that traders are getting into this market. Let me just mark it as a line instead of BOS. That lets me know traders are getting into this market. Why? Because we've taken this high out. So since we've taken this high out, we see that we still have areas to the left that sellers would want to be selling from. Yes. So I still do not want to be looking for any sort of sells because all of this is essentially liquidity. So we respect this area and then we move down. We have a reaction up indicating that early buyers could potentially be in the market. And why do I say that? One, there was no buildup yet until we reacted from this area. We had this buildup here. So therefore, once we take it out, we can see a potential move up. And then now let's go forward with price. So now we see another potential move up. So now we just seen buyers get into the market again. So now that buyers have gotten into the market again, I want to see them get taken out. So now that I want to see them get taken out, where can I frame that out from? Buyers were getting into the market from here. So that lets me know that below there is where I want to buy from. And notice how, what do we have below? Liquidity block. Amazing. So stop loss underneath the liquidity block as always. Target this high, the build up high. And remember that high that I spoke about on a higher time frame as well, where sellers would still want to be selling from. So we target that high. Then you have a partial point here. And then there's also another target on the higher time frame. These equal highs that have been left. So now let's see. What time is it? It is 10 o'clock. So New York stock open already happened. We get a big buildup at this low. Price stabs below the internal low, respecting the liquidity block, and look at the push that we have. Insane. Absolutely insane. Now you guys see the power of using the inter-equity model. So what have we learned today? We learned that these areas essentially that we've learned in SMC or other concepts and other communities that we would want to be trading from, just what they do is they generate liquidity in the market for us. And that's what we want to see. So that's all I have for today. Thank you for joining me in my first video, and I hope to bring some more quality content in the future for you guys. Thank you.